Staying with China, the future of Hanergy, the thin film power company, is still in question. Hong Kong regulators have expanded their investigation into the price sharing that rose and then later, of course, getting hammered in May. The Chinese-based solar technology company has turned into a test case for regulators on both sides of the border. Cathy Yang explains from Hong Kong.
One of the first casualties in Hong Kong of the Stock Connect scheme, Hanergy Thin Film Power, is a mainland firm that harnesses solar power to provide clean energy. Hanergy on May 20th lost $19 billion, or half its market value, in just 24 minutes of trading. The stock had been suspended since, pending results of an investigation. 2 months on, Hanergy's chairman Lee He-jun and his firm are still looking for light at the end of the tunnel. So are its investors. Louis Wan invested in Hanergy shares 4 years ago. He witnessed the stock's meteoric rise, a whopping 650% jump in 8 months. Fortunately, he sold all of his Hanergy holdings just before the stock's dramatic fall.
The company's financial statements are too good to be true. We are thinking that there will be the revenue may be mainly driven by the related party transactions.
Sources reveal Hanergy is being investigated by Hong Kong regulators for alleged market manipulation. The firm's parent, Hanergy Holdings, said it had not defaulted on any of its loans and denied reports that pledged shares of Hanergy had been sold by creditors. Mr. Lee said in a statement, the group has and will continue to use its best endeavors to address the concerns of the SFC. It has sought to resume trading of its shares as soon as possible. The sell-off saw Mr. Lee's fortune shrivel by 100 billion Hong Kong dollars, knocking him off the top spot among China's richest. On top of that, countless investors have lost money, shining the spotlight on regulators from both sides. Can mainland and Hong Kong authorities help enforce cross-border regulation that will protect and compensate investors? Strategist Sam Chi-yung says Hanergy's woes sheds light on the potential risks of cross-border trading.
I think for Hanergy's case, since there are many unknowns between the relationship between the company and as well as its holding companies. So if they can improve the transparency in this case, I think this is good for the company.
FTSE said on its website last week it was dropping Hanergy from its China 50 index and other indexes from July 20th. Analysts say MSCI might follow suit, further dimming the prospects for this one shining star of the global solar industry. Cathy Yang, CCTV, Hong Kong.